Alright guys, on to the gold chart. So pretty interesting price action today, pretty straightforward. If we look at the 60-minute time frame on the left of us, as you can see that we did break out one of our breakout regions on the hourly. From previous videos you may also notice that the psychological levels are more or less drawn on here. You can say 13.15, 13.10, 13.05. Market is currently breaching 13.20, okay, right here. But what we got a huge breakout of the box zone. Market consolidated for a while. We tapped into 13.10. This candle, we bullish move back above the moving average. The moving average, as you can see, has actually supported the price very, 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 very well. We retested back into the box 13.15, spiked back to the upside, consolidation, and as you can see here again, another entry to jump onto the moving train. So the bullish engulfing, when the market spikes into the moving average, we get the bull run on that hourly time frame. That is an execution there. Remember, you can keep your stop losses 3 to 5 pips below the back end of that candle. Same thing here as well. So we've run into the moving average, used it as a dynamic area of support. We can also mix this up, mini little trend line on there as well to assist us with our confidence in holding the trade to the upside. Now the market has made a new high, okay, past the previous. Gold can actually maybe pull back now, so that's something I'm looking for on gold. If you look at the 4 hourly on this chart before I actually get into the flip chart, we can see that the moving average has actually supported the price extremely well. Look at this. So we broke back up of 13.10. We consolidated for some time. We spiked 1, 2, 3, remained above the MA, broke out of the box beautifully this morning. 13.15 broken. There we go. That's another excuse to go long. Stop behind, market retest into 13.15, continuation. Now, current price on the 4 hourly, we spiked to the high, but look at the body, we're actually closing. Oh no, sorry, we have 2 hours left on this candle. If we close below 13.20, we may get a reversal and the market may pull back after making that high. Over here on the Astro flip chart, as you can see, using the other side of the fence, if you will, it looks as if 13.26 to 13.25, the next psychological level, could be on the cards for gold. It really does depend on how the daily time frame closes. Bringing up the daily, as you can see, market pull back above the moving average, spike into it, again another spike into it. So we are on a medium-term bull run. After Friday's candle closure, the bulls took control. We closed back above the previous day's bodies right there. We retested into 13.10, and now we're getting some good momentum showing. If we look at the daily over on that Astro flip chart, it is looking that this thing can sink, i.e. obviously go higher over on the left, because we can see all of these wicks. 1, 2, 3, 4, 5, 6, 7 wicks. 7 wicks thrown to the downside, which is extremely clear over here. This could maybe even go into the 13.46 region. 13.46, which I've already marked on. I took the body of the candle up to the wick. 13.46 could be an attraction factor for gold over the next week or so, but I'm going to try to keep you guys updated with all of the moves. I'm going to step back into gold in 2 days' time. Again, it's currently Monday, 14:50, so it's 10 to 3 in the afternoon. US session has came through in full force. But yeah, nice continuations on gold. And yeah, I'll check back in with you guys to see how this one plays out. Hey guys, so onto the gold chart. We've had quite a lot of price movement actually since Monday, even since last week. So what we were actually expecting was the breakout, and we had the box drawn on over here. So we had from psychological level 13.10 up to 13.14, basically 13.15. So we got psychological level to psychological level. Again, I taught this on the psychological level video over in section 2. And I'm just going to keep reiterating this for you and putting the pieces together so we can actually get the main levels and more confidence to actually trade from the round numbers. And I explained the gold levels, oil levels, and the levels are in GA and USD CAD. And again, with the currencies, the same concept does apply to the rest of the instruments. So where to start? Let's have a look at the week. So gold weekly right now. Gold weekly is quite interesting because we had this phenomenal move to the downside. Obviously, the week before pinned all the way into, what's the highs here? So we have 1340, let's just say 1345. Pinned straight into 1345, closed a lot lower. Week afterwards, reached a tad, on the intraday time frames, that would have been a nice little right shoulder, and then boom, down. Now, when we closed into, let's just say 1300s or 1295 right there, you also have to consider 1, 2, 3 weekly wicks. Now, the weekly wicks, I'm going to start to emphasize the importance of this going forward to get the overall weekly bias for the medium-term holders, medium-term buyers and sellers from the institutions, and where they're going to push the price maybe over the next few weeks into maybe months or even for the quarter. So 1, 2, 3, there's liquidity here that the market pushed its way into, and you can actually tell by the following candlestick that it spiked straight into that, collected the orders, and as you can see, the market continued to go up to the upside. Now we more or less spiked into 1325, and if we go into the daily time frame now, this could be a potential huge move for gold back to the downside. What we have to consider on gold is if I take the rectangle tool and bring it all the way across here, this is a point in which the market can magnetize price into. So 1310 down to 1380s. Now, this is just a longer term perspective. With that being said, as you can see that the market pushed up against the moving averages, stayed above, but now if we can get this daily break below, it could signal and signify to us that the market is now ready to reverse and turn around. So that could be our medium term bias. Going into the 4 hourly, the market has already done so. Break below, retest, just as we did the box breakout on the hourly, which was over here. What we can now go ahead and do is we can find, even though we are, so go into the settings, obviously we set up the template together as well, so we go into the breakout template. What's actually happening now, guys, is the breakout is right here. 1 hour 50 minutes, that candlestick, if it closes below the blue layer here, Exhibit A, Exhibit B is 1310 psychological level. From there onward, and we can also see the market has been throwing spikes to the upside all the way up here into the box region, consolidation, and look how the market stayed firmly put on 1315, but now momentum is back. So gold for me, next target to the downside could be 1305, and then from there onward all the way back down here. And all of these structural levels from 1 down into 12, so we've got 1305, 1300, then we've got 1295, then we have 1290, and so on and so forth. So for me now, if you look at the flip chart side of things, the Astro flip, it looks as if this trend is now reversing. As you can see here, look at this, wick, straight into the region. We just came shy of 1324, but for me what's important here is that we dipped below and back above. So over here we made the new high, we came back below 1320. So as long as gold remains below 1320 for now, I believe that all of the structural levels can be taken out, and from there onward we are probably going to expect price action to continue this form and continue that downside move. So let's see what happens, and check back in soon. And we're back on March 29th, it's Friday. It's currently 3:38 p.m. We're still rolling into the New York session at the moment, but a nice gold update actually. So from our last video, as I did mark out and mention on the 4 hourly, that gold broke back below the moving average. We consolidated for a while on 1315. We threw multiple wicks to the upside, then we broke the box region. After the box region was broken, one thing here that I would just like to mention is that this candle in particular, we did spike through 1310, we spiked back, price pulled back and actually closed above. That there isn't the best breakout candle in the world due to it's only really closed probably what 40 to 55% of the overall down move in that 4-hour time frame. However, the next candle did actually complete and break below 1310. But what's important here as well, guys, is the wick of the candle. The next candle pushed the momentum down and actually closed back below it, or more or less next to it. Intraday price pulled back, retesting 1310 1, 2, 3 times perfectly. We also spiked through the moving average here, and actually once more this pattern was repeated here. So look at the wick to the downside where momentum couldn't hold. Then we spiked up, tested the MA, spiked straight through 1310. Then we closed more or less, taking out the majority of candle wick 1, 2, 3. So it told us breakout, retest 3 times into the MA, continuation down, and then as you can see, gold went from 1308 to 1300, say. So we had a 80 pip move, 80 pip move in 4 hours flat. Them closing around 1300, we had another huge move that led us down to 1288, which was around 120 pips. So 120, we had a massive move on gold. From the last video, I was trying to map out where gold can actually go next. For me, we had the consolidation over here where price had to build up, shot to the upside. But also, if we extend this across now, gold come back into that region, making lows of 1286. 1286, market pull back. Now, what we can see here is that we have multiple spikes and regions that we need to consider. So if we take the 4 hourly, change this template over to the box region. Oops, 1 second, there we go, box region. So we take that, we extend it all the way across. We came into 1288 more or less, rebounded, market shot back up, testing 1300, just shy of 1300 by about 3 or 4 pips. And now I expect gold to continue down. So we had that pullback after the entirety of the move from the high to the low. So we have 1324 down to 1286. That's nearly 400 pips. Oh no, over 400 pips. Well, nearly 500 pips from top to bottom. So that's a big move. So we are expecting that correction. But now I see gold continuing, once it's tapped into the 1300, back down into one of our other daily levels. This is a daily level if I go to show you. So across here, as you can see, higher low formation, higher low formation, 1, 2, 3, 4, 1, 2, 3, 4, uproar. Now, due to the daily, we have 1, 2, 3 daily continuations. And maybe I wouldn't be surprised if gold pulled down lower, made a new weekly low. And over here as well for the week ahead, if you consider, we are now going to be closing below the moving average. So the whole bias is now shifting. So we went from significant high, new low, lower high, and now we're expecting a lower low. So ultimately, I'm looking at this point here, 1280 being taken out, maybe even to the regions of 1270, 1275. Yeah, well, daily moving average broken through and beyond. So there's various options and various technicals that we put into play on Wednesday, just gone, that have all fulfilled, and now we're expecting for the targets to be fulfilled. So that's gold, guys. I'm going to check back in on Monday with some fresh analysis for the week ahead, and I hope you enjoyed the video so far. On to the next.